And now, Lifestyles Unlimited presents the Real Estate Investor Radio Show. Over the next hour, we unfold your map to financial freedom. You'll learn how to retire through investing in single-family and multifamily real estate. You'll learn how to create cash flow and build wealth so you can have the time and money to live the lifestyle you want.
Welcome to the Lifestyles Unlimited Real Estate Investor Radio Show, or I should say the Lifestyles Unlimited Real Estate Investor Podcast, because depending on how you're getting this medium, it's either or. But here's the thing you need to understand. It's the same content. It's the same information. Whether you listen to the show on the radio or you listen to the show in a podcast format, you're getting the same information. And it's information you can use. Information that can change your life. Information that can get you thinking about doing things a little bit differently than you've been doing them. Information is power. And you're bombarded with information on a daily basis. You get it through your phone, you get it from your computer, you get it from your television, you get it from the radio, you get it from wherever you get your media. You're bombarded with information. Some of the information is good, some of the information is bad. Some of the information reinforces good behavior in you. Some of the information reinforces bad behavior in you. It's just human nature. Now, what's behind a lot of this information? Other information. Other information doing what it needs to do to accomplish what it's trying to accomplish, and some of that is sharing information with you. Do you realize that marketers spend a lot of time and treasure to understand who you are so that they can market directly to you? I think marketing has come a long way since I studied it back in the 1980s. But even back then in the 1980s, marketing was all about understanding your customer, understanding the people that your business serves. It's also about understanding behaviors, understanding what influences people. And now that we've got these phones, these computers, this AI, all this stuff that's monitoring us, observing us, listening to us, all of that data is ultimately being funneled back to the marketers. And they're using that data to build a profile of who you are so that they can market more efficiently to who you are and avoid you if you're not part of their target market. Now, what does all this have to do with real estate investing? It has everything to do with real estate investing. Because you're bombarded with information. Some of it is pro-real estate investing. Some of it is anti-real estate investing. What are you doing right now for investing? Now, some of you are invested in minerals. Some of you are invested in gold. Some of you are invested in crypto. Some of you are invested in the stock market. I'd say the vast majority of you have a 401k and or an IRA. That tells me that you're investing primarily in the stock market. Tells me you're probably involved with mutual funds because they're just easier. So that's what you're doing. And when you hear about real estate investing, some of the things you hear are information about how people are making it. not only to retirement, beyond retirement, that they're flourishing because they started investing in real estate. But some of you are hearing that, wow, the real estate markets they're doing kind of bad right now. Prices aren't going up as fast as they were. Rents are coming down a little bit. Seems like doom and gloom, right? Well, let me share some information with you that you may not be receiving. And that's the whole purpose of this show, is to share with you information that nobody else is sharing with you. Content that's fresh. Content that's immediate. Content that you can use today that wasn't necessarily published a year ago or 2 years ago or 3 years ago. Real estate investing can absolutely change your life in a good way or in a bad way. It depends on how you approach it. Just like everything you do in life, there's risk involved. And you have to mitigate that risk. That's how you survive in life. You mitigate all the risks that surround you. So how do you mitigate risk? There's two ways to do it. Two absolutely immediate and present ways to get it done. The first way is to educate yourself. The second way is to get a mentor on your team. When you have the right education and you have the right mentor supporting you, your potential is limitless. You can go a long ways and make some great gains, radically change your life, repurpose the money that you have saved up in your 401 or your IRA. You could actually blow those things up and start investing in real estate with that money. And that scares the daylights out of you because you don't know how to do it. Well, that's where Lifestyles Unlimited comes in. Lifestyles Unlimited is a real estate investor education and mentoring company, and we've been around for well over 35 years, and we're going strong into year 36. And in the next segment, I'm going to focus on one of those two things that you need to get. Stick around. Welcome back to the show. You know, I was listening to another podcast the other day, and this podcast, I'm not going to tell you what podcast I was listening to because I don't think it really is that important. Let me just tell you the premise of what the guest on the podcast was saying. This was an interview between somebody who is a kind of like a Dave Ramsey kind of guy, but he's not Dave Ramsey. And he's developed a education company similar to what Dave Ramsey does. But he's not Dave Ramsey. He's a different guy. And what he's looking to do is educate people on the basics of finances, on how to get a handle on your finances. Because, and here's an area where I'm going to absolutely agree with this gentleman. There's no financial literacy taught in the schools or in the home. Financial literacy is like, it's not even discussed. People don't even know how to do it. And the problem with financial literacy not being discussed or not being taught is that you grow up not knowing what you don't know. And you're doing exactly what everybody who has good intentions for you tells you to do. You go to school, you try and stick it out in school. Some do better than others. Some make it to college, some don't. Some go right into the workforce. Those that go to college, that some study, some party. Okay, let's just call it the way it is. And then eventually they get done with college and they go into the workforce too. And what are you taught? You're taught how to develop an income, right? Trade time for money, get a job, work so many hours per week in exchange for so many dollars. And you get used to that because you've never really had that before. All of a sudden you've got income coming in. It's like, oh, this is a cool thing. But then the expenses of living catch up with you, right? And along the way you go, oh, I got to do something about my future, even though that's not really discussed, right? So who discusses it with you? Usually a financial planner that somebody at the firm that you work for, the organization you work for, suggested, because you probably got a 401k, right? Yeah. So you hook up with a financial planner. They give you a spiel on what your future could look like if you do what they tell you to do. They suggest mutual funds. They suggest the 401k, or maybe in your situation, it's an IRA. And they say, hey, you start taking money out of your salary, you start setting it aside. You do that for 40 years or so, and you should be good to go. And here's the problem. My generation is the generation that started that 401k IRA thing. It all began around the time I was graduating from high school and going to college and graduating from college. I heard all about the 401k. I heard all about the IRAs. But me personally, I was following a different path. I was working on a pension. So there was no 401k for me. But the pension required that I work at least 20 years in my career field in order to earn that pension. So I didn't do what most of you are doing. But let me point this out to you. I got to a point where the pension is paying me, but it's not enough money for me to live off. I mean, it's good money, don't get me wrong, but it's not enough money for me to live off of. Not to the lifestyle that I've built for my family and myself. So I needed other sources of income because the pension only goes so far. So what does that mean? It means I learned about real estate investing. Now, here's something else you may not know about me. I've been a real estate investor since 1988. That's when I bought my first investment property. And I did it all wrong. I had no idea I was doing it wrong. I thought I was doing it right. Seemed like it was right. Didn't have much experience. I had like zero to start. I had no feedback from peers because nobody else knew how to do it. But I bought a piece of investment property and I gave it a go. I know I screwed it up because I never took any depreciation write-offs on that property. I thought I was cheating the government. So I never took depreciation. How dumb is that? Well, I was pretty dumb I was like 24 years old when I bought that piece of property. Eventually sold it a couple years later. And then really didn't own any real estate until after I got married. And Tina and I were being assigned to a place in Southern California where I could actually buy a house to live in. So we did. And I really didn't mess around with real estate investing again until the 1990s. And I started buying some duplexes. And again, I was doing it all wrong because I didn't know. I didn't know what right looked like. Thought I knew what right looked like. I mean, I read some books, right? So I must have been educated, right? But here's the thing. It wasn't until 2017, many years later, that I came across Lifestyles Unlimited. And they were sharing information across the airwaves that made sense to me. So I checked them out. And what I learned is that Lifestyles Unlimited is a real estate investor education and mentoring company. And as a company, that's all they do. And they've helped people understand how to invest in real estate the correct way. And that's allowed many people to change the trajectory of their lives. Now, instead of being in the stock market, which to me is very risky because you have no control over what the stock market's going to do, and now they're in more tangible assets that pay them multiple ways. Now, going back to that podcast that I was listening to, I know I kind of went off on a bird walk there for you. I apologize for that. But let me take you back to what that guy was saying that really caught my ear. He said the S&P 500 does better than real estate. And as soon as he said it, I said to myself, well, that's some misinformation going out. Because if you do the research, the S&P 500 doesn't necessarily do as well as real estate unless you're using other people's metrics. In the next segment, we'll talk about that more. Stick around. Welcome back to the show. So shall we get into it? Let's do it. Let's get into it. Because some of you are invested in the stock market right now, and you're looking what the stock market's doing. It's pretty healthy, right? It's very healthy right now. It's been hitting new highs. But what happens when the stock market doesn't hit new highs anymore? What happens when all the excitement that is baked into it right now willows out? Will the stock market keep going up and hitting new highs, or will it balance out and start trading sideways? Or potentially go down in value? Now, I know a lot of you understand dollar cost averaging, and you're not afraid of that. But you should be very afraid of it if you're closer to retirement age. Because if the stock market starts going down and you're trying to retire, you're going to watch your nest egg kind of go away. It's not pretty cool, is it? Not cool at all. Now, I know a lot of you are thinking, well, you know what, the real estate stuff you're talking about, Al, very risky, takes a lot of money, takes a lot of time. And I'm here to tell you no, no, and no. Not that risky when you're educated on how to do it correctly. Now, I told you at the beginning of this episode that I bought my first investment property at the age of 24. That was a long time ago. And I did things wrong. I wasn't educated. I figured, well, you just buy a property and it just goes up in value because that's what I knew. That's what I knew about real estate. It just tends to go up in value. So I bought a property. It didn't cash flow. I didn't capture any equity in it. I had the benefit of principal pay down because I had a mortgage on it. I had the benefit of natural appreciation, except at the time that I bought the property, values of real estate were actually declining. So ultimately, when I sold it a year and a half, 2 years later, I really didn't make any money off of it. So I didn't really get any natural appreciation. And I told you earlier, I didn't even know how to take depreciation write-offs. Probably wouldn't have mattered because I wasn't making any cash flow. So I wasn't even writing depreciation off on the property. And then I ultimately sold it. Really didn't make anything on the appreciation. So that was my first experience with real estate investing. It's kind of blah. Very blah. Very, very, it didn't do much for me. And you've heard all kinds of stories like that, right? Where people have gotten into real estate and they've had marginal at best results. Well, I will tell you that result that I had left me kind of blah to real estate. It wasn't until, 10 years later that I started looking at real estate again. Now, had I been a Lifestyles Unlimited member back in 1988 when I bought this property, and there's no way I could have been a Lifestyles Unlimited member because Lifestyles Unlimited, let me get the term correct, hadn't even been created. It wasn't created until 1990. But had Lifestyles Unlimited been around like it is now, and had I known about it like I do now, it would have taught me the different ways we make money by investing in real estate. It would have taught me a different process to going about buying real estate. As a matter of fact, I probably wouldn't have bought the real estate that I bought. I would have bought something else. Because here's the fundamental mistakes that I made. When I bought the property, I fell in love with the property and fall in love with the numbers. I didn't even know how to fall in love with the numbers. So I just kind of fell in love with the property. It's like, well, I could buy that. So I kind of just did. Paid full retail price for the property. Didn't know that was a bad thing to do, even though the property did have some deferred maintenance on it. I should have paid less for it in compensation for the deferred maintenance. But I didn't know what I didn't know. I should have done a market analysis on the rents. I did a market analysis on the value of the property, and again, I paid full retail price instead of paying a wholesale price for the property. So I didn't capture any equity in the deal. But I didn't do a rent survey. Didn't even know to do one. Had I done a rent survey, I would have probably figured out that I couldn't rent the property for as much as I needed to cover the expenses of the property, thereby creating a no cash flow situation. I just did a lot of things wrong. There's more stuff I did wrong. Like I did the repairs after the fact. Yeah, see, as a Lifestyles Unlimited member, you're going to be taught to repair everything up front. Go through and analyze the property. Look at all of the systems. Determine what has a useful life of, say, 5 years or longer. If you identify something that has less than a 5-year useful life, you repair it or you replace it, thus giving it at least a 5-year lifespan. We do that for a couple of reasons. One, for our own sanity. As owners of the property, we don't want to be bothered by our residents having to call us because they've got a problem with the property. We want the property to be operating smoothly. That's a benefit to the resident. See, the resident doesn't have to be at home so that you can send the plumber over to repair something that you should have repaired going into the business venture. Convenience for your residents. After all, they're paying you a lot of money to call that place home. And they don't want the headaches associated with you being a bad landlord. So there's a lot of things that I just didn't know I didn't know. So I had kind of a meh experience. Had I known what I didn't know, I wouldn't have bought that property. I'll just tell you flat out, I wouldn't have bought that property. I would have bought a different property. But I wasn't educated. I didn't have a mentor. The two things that Lifestyles Unlimited does extremely well: education and mentoring. Neither were available to me. So I didn't have a good experience. And that's what you guys have been hearing. That real estate doesn't do better than the S&P 500, like that guy I listened to on the podcast. But you can do your own research. You can see how the market produces over time. You can also do your own analysis of real estate. But here's the thing that AI is not going to tell you. It's not going to show you the types of returns that you can obtain if you're doing everything correctly, if you're doing everything the way you're educated to do them. When your engine is firing at all cylinders, you can't help but be successful. Kind of a mixed metaphor there, but I liked it. So think about it. Education and mentoring. What if I told you there's a place where you can get it and it's not going to break the bank to get it? Would you check it out? Then what I think you ought to do is go to lifestylesunlimited.com. When you get there, click on Start Here. And what it's going to show you is information about Lifestyles Unlimited and give you an opportunity to become a member. Come join us. Be a part of what we do. And then take a look at the price point at the bottom of the screen. Not a bank breaker. In the next segment, we're going to talk more about mentoring. Stick around. Welcome back to the show. So, a mentor. Do you have one? Do you even know what they do? Do you even know if you require one? Well, here's my experience. Because I've done real estate investing with a mentor, and I've done it without a mentor. And I will tell you this. Doing it with a mentor, hands down, best way to get it done. Absolutely hands down, best way to get it done. Because you have an extra set of eyes, ears, voice, and a conscience from somebody who has more experience than you do, helping you along the way. I think one of the smartest investments in real estate investing is to have a mentor. I do. Because experience guides your success. It guides your learning. It helps you minimize costly errors, provides a proven roadmap to success in a complex and competitive market. Now, there was a time I did real estate investing without a mentor. It was most of my real estate investing timeline. Yeah, from 1988 until 2017. What is that? 30 years? That's a long time. No mentor. Average at best results. Didn't know what I was doing wrong because, well, I didn't know that you could do stuff wrong. Because I didn't know what I didn't know. That was the lack of education. But along with the lack of education was the lack of somebody there kind of putting their arm around my shoulder saying, Al, this is going to be fine, man. You're doing great. Do this, do this, do this. I didn't have that until I joined Lifestyles Unlimited 9 years ago. And voila, a difference maker was created. Not only did I receive the education I was looking for, I received the benefits of mentoring. Now, when I came to Lifestyles Unlimited, I had some single-family assets. And again, I had bought them wrong. I had operated them incorrectly. I had owned them for a long time. And I was kind of letting them wear out because I really wasn't investing anything back into them because I didn't have a good business model to follow. So in 2017, when I became a member of Lifestyles Unlimited, and I had the opportunity to sit down and talk with a mentor, You know what the mentor told me about those duplexes that I had held for a long time? He said, you probably, first of all, need to refinance them because your debt on them is terrible. And I really hadn't realized that interest rates had come down and that I had higher level debt on them. I just figured, they were paying down a little faster because the debt was older. But what I didn't realize was the debt was costing me a lot of money. And then if I could refinance the properties, I could actually turn negative cash flow into positive cash flow. I couldn't see that myself, but the mentor saw that, and the mentor explained it to me. So that's the first thing I did is I refinanced all those properties. And I did much better financially. All of a sudden, I had cash flow. Still couldn't capture equity on any of the properties because I had bought them wrong. But I was getting natural appreciation, was getting principal pay down, was finally getting some cash flow. Yes, at this point, I had learned how to take depreciation, so I was getting the tax benefits. But the problem was the properties, I had owned them for a long time. I had taken a lot of depreciation out on those properties. And it was really time to let those properties go. And I needed a mentor to tell me that. Mentor said, we're going into a seller's market. And you may want to consider selling those properties that you have and reinvesting those proceeds into replacement properties. And instead of buying plexes, buy single-family assets to replace them. And I thought about that for a minute, and I thought that's a pretty good idea. But my concern was, I've owned these for a long time. I've taken a lot of depreciation on them. Got some capital gains there. I'm concerned about being taxed to death if I sell them outright. Mentor said, no problem. Do a 1031 exchange. So I did. For each duplex I sold, I 1031 exchanged it into a single-family asset. And for each single-family asset that I acquired, I brought it up to speed, had a renter in it. We got into a hardcore seller's market. I turned to my mentor and I said, what would you do? Now, this is 2021. We're already into a pandemic. Real estate prices are going through the roof. I said, what would you do? They said, you might want to consider selling. And I said, why would I want to do that? Because when you have the opportunity to sell at the peak of the market, which is pretty much where we were at, you take advantage of that. You liquidate your underperforming assets and retain those that are performing well. Well, these were all performing okay, but there was a lot of equity baked into them. And what I wanted to do was I wanted to take the money out of the single-family assets and buy multifamily assets with it. And that's ultimately what I did. Now, some of you are going, wow, you did a 1031 exchange into those single-family assets and then you just sold them? Weren't you worried about the tax problems? And here was the solution. No, because with the assets that I was buying to replace the single-family assets, I was getting a lot of depreciation write-offs. I specifically had picked investments, and this is based off what my mentor advised me to do, and He was right. I had a lot of depreciation write-offs that covered my tax liability. It was like a perfect storm of avoiding the tax man. And you can only do that with real estate. Can't do that in the stock market, but you can do it in real estate because the tax laws are written differently for real estate than they are for companies that you don't know anything about that you're buying in the stock market. So that mentor brought me knowledge, experience, guidance, advice. But there were additional things that mentor helped me with. That mentor helped me with accountability and discipline. And here's the biggest piece. That mentor actually gave me confidence. Confidence to run like a real estate boss. Yeah, a real estate boss. I felt like a real estate boss because I was in control of what I was doing. Everything was transacting the way it needed to transact. I was getting all of the benefits of real estate investing. I was experiencing the 5 different ways we make money in real estate instead of the 1, 2, maybe 3 that I was barely experiencing. See, a mentor is a game changer. They're going to accelerate your learning. They're going to be there when you need them. They've got a deeper knowledge base than you do. And they want to help. They absolutely want to help. And when you join the Lifestyles Unlimited community, you're going to surround yourself with a myriad of people that want to do exactly the same thing you're doing and are doing exactly what you're doing, who have the benefit of the education, who have the benefit of the mentorship. It is a game changer. It will accelerate what you're doing for investing. It will help to minimize the risk. It will help to accelerate the learning. And it's going to give you opportunity that you haven't had before. And all you have to do to unlock all of this is go to lifestylesunlimited.com. I'm sincerely saying go to lifestylesunlimited.com. Consider becoming a member. Click on Start Here. And let's get you going.
Thank you for listening to Lifestyles Unlimited's Real Estate Investor Radio Show. Ready for more of the map? Visit lifestylesunlimited.com. Explore our videos and articles. Click on the radio tab to access past show podcasts. View the radio show schedule and listen to our best of radio shows. Want to continue the conversation? Follow Lifestyles Unlimited on Facebook today. We want to meet you as well. Sign up for a free workshop at lifestylesunlimited.com. Until next time, remember, it's not the money, it's the lifestyle.
The information and opinions you hear on the Lifestyles Unlimited Real Estate Investor Radio Show are those of the hosts, guests, and callers and do not necessarily reflect the opinions of this station, its affiliates, its management, or advertisers. The Lifestyles Unlimited Real Estate Investor Radio Show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented on the Lifestyles Unlimited Real Estate Investor Radio Show constitutes an endorsement, recommendation, offer, or solicitation to buy or sell any product or security.